Well, good afternoon, Maverick traders. It's Joe. It's market roundup time. It's the 12th of December. It's Tuesday. Let's get into what happened today. First off, I'm going to talk about what I saw in the news of the day. If there was anything meaningful, I'm going to take a look at the charts. And as always, I'm going to bring you guys trades that we share around the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the market analysis, it's basically just more of the same. One thing that I thought was very interesting is the markets didn't waste too much time yesterday and today pushing into brand new highs for the year. This is actually a very, very bullish kind of gesture, I should say, move in sentiment here, especially getting this close into the holiday season, where we've got basically the rest of this week and into next. The holidays both fall on Monday, so it's really going to mess things up going into even the first week of January. So real quick, let's get into our daily news. The markets extend highs for the year. Sentiment remains optimistic and steady. What I found to be very interesting with this that kind of solidifies the power, I should say the strength, or the resilience of the bulls is the volatility. This isn't reaction. This isn't fear of missing out. I'm not seeing a whole bunch of stuff just randomly taking off for one day. This is a nice, slow, steady move into a bunch of stuff. So the volatility is low. CPI came in line with estimates, confirming that stability we've talked about that the Fed seems to pride themselves on when it comes to the inflationary outlook moving forward. We do have the PPI tomorrow. I'll talk briefly about this in the last slide. A couple more things to look at, including an FOMC meeting that I don't think is going to carry any weight at all. That's my opinion. How did we finish? Well, the Dow, the S&P, and the Qs all up flat. I'm going to call this a nice, comfortable, healthy, let's add some more day. 0.5% across the board. A little higher in the Qs. The Russells pretty much flat, broke even, but take a look at oil. $3.7% down today, below $70 a barrel. It's at 68 and change. Energy continues to suffer. It continues to just get smashed here. Gold, flat. And I think gold's just going to hold in a little bit to see what the Fed says on the FOMC. Gold showed a little bit of a spike as of late. Kind of, a little bit worried that maybe the inflation's still there, but it could just be an oversold bounce. Who knows? We'll see what happens. Advanced decline line above below the 50-day moving average. Pretty much a flat day. You can see 48% below, 47, declining, 47% advancing, 5% just kind of hanging out doing nothing. 75% versus 25%, or 74-26 above the 50-day moving average. A pretty healthy run for the majority of the stocks out there in the majority of sectors over the last week. Now, this surge that we've seen, I'd say Thursday, Friday, Monday, Tuesday, is very remnant of what we saw, about the beginning of November. It's a huge surge, but it's not as aggressive. It's not as volatile. I'll show you the chart here. You'll see the volume is not nearly as big. Let's jump straight into the chart here, and you'll see that it is moving higher. Definitely showing some good signs of optimism. Right? I'm going to draw this all the way back into here. This was the previous high. Before we made a push and consolidated there for about a week or so, but you could see Monday and even today, we just decided, hey, the S&P is going to catch up with the Qs and the diamonds and push into new 52-week highs. Now that the S&P is there, I think that there's really not going to be much to get in the way of these markets to continue much higher. So I imagine we just kind of continue to float. Let's take a look at the Qs briefly here, and you can see that it's going to be the exact same thing. It's just a little bit further ahead. Let me get my line out here because it did. Well, it's kind of hard to see, but this was its previous point right back in this area. Let me zoom back in here. But the nice consolidation, and then it just moved higher, and it's just kind of off to the races. It does feel overextended. We talk a lot about, hey, it might feel like you're chasing things. So I'm okay playing stuff that moves off of bases. You don't have to be a +3 or a +2. You'll see my outlook, yeah, it's going to be high, but we can look for things that haven't really extended themselves, or we could play something sideways to slightly up. We can play a +1 in these situations if it's there. So take a look at this heat map, and this is kind of the heat map that I would expect, even on the energy side of things. Yesterday, we saw a little bit of hesitation in some of the consumers, some of these bigger names. I do believe that your Amazons and Teslas and things like that did get hurt a little bit. You could see they all participated today, though. Everything's back up. Oracle, a little bit of a hiccup here, down 12.44%. Definitely got some sort of news behind that. But overall, it's just pretty much across the board a slight move to the upside. So where does that leave me? Well, I'm going to have to agree with everybody else in the consensus that's been out there for a while and stick with this bullish outlook, and that the sentiment is going to continue to move these markets. I had to go to monthly outlook to a +3. You guys know me personally. I have a hard time pushing into those categories. But based on what we've seen, we now have the 2050 positive slope above the separation between the 2050 and the last three, I'll call it the last 5 days, with the SPY, including yesterday and today, pushing into that 52-week high for the first time is just super comfortable. It makes me comfortable to go to a +3 for the month, and I don't think we vary too far off of where we're at today. Maybe a little lower, maybe even a little higher, going into the end of 2023. I gave it a +1 for the week because of that, because of the extension. However, guys, don't confuse that with going bearish or anticipating a pullback. Please find something bullish, even if it's a little extended. Put something like a 0 to +1 on it. I'm fine. You can play the bear side, but it also needs to be a little bit tight to the cuff. I'll talk to that here when I get to this last slide. Here's some trades I took a look at. Johnson & Johnson, Amazon, Energy, AFL. A couple of these came from previous weeks. I carry it forward. I like Johnson & Johnson because it had a bull pullback. Finally, something that actually has corrected where we could see the confirmation of a pivot point move higher. I'll talk more about that because it hasn't confirmed yet. BEKE has been going sideways. It's been on my watch list for 4 weeks now, and it's still looking really good. Monster's one that Rob brought up yesterday, or excuse me, on the weekend class, and I still think it's kind of neat. OXY, PBF, Deere, Pfizer, all these things have been bearish, and they're staying bearish. So how can we play it? Well, let's take a look at one of them. First off, Johnson & Johnson. What I liked about this is I liked this move that it had back to these support levels, and the line kind of drew itself. I like that about these charts. But it has not confirmed that pivot point. It is slowing down. It's trying to. I do really like this crossover going on right here. It is early yet, but it's still showing some pretty good signs. I might need to see 1 or 2 bullish days. Let's see if I can. I know this candle will be red, folks, but something like this, maybe even something like that before I play this to the bull side. Now, I'll just tell you right now, folks, my target won't be your cut and dry resistance area up in this. It's not going to be. It's going to be more of a projection. I might even go through and snap a Fibonacci on this thing, but I might play something back to this area around the, what do we call it, 163, or even up to the 165 mark, back where it was previously. So I'll wait for 2 days of confirmation, 1 or 2 strong days, and just kind of catch this as its next surge. I just want to make sure that this pivot point confirms. I don't want to sit there and anticipate it because it is a weaker stock. It is emerging, and I'm just hoping it kind of catches the motion of the ocean here and kind of moves higher. If it doesn't, I don't want anything to do with it, and I'm sure not going to play it to the bear side. So that's Johnson & Johnson. Let's move on to our sideways trade, and you guys can see it is BEKE again. If I can get her to pop up for us. There it is, or KE Holdings, but it's BEKE is the ticker symbol, and it is just continuing to stay within this box. Let me see if I can draw it for us right through here, and I anticipate it staying there. It's been really neat. Came back up to this level here 2 weeks ago, and it came right back down. Didn't even really retrace down to the 74.5 or the 14.5, the bottom of the box there, and now it looks like it might be getting a little bit tight, and that's fine if it wants to play this tight base. It's gonna pinch a little bit, but understand once it does, it might break out. That's okay. I've been playing or looking at this thing week to week, so I don't really need to slow play this for a month and a half. See what it does each week. Look at your butterflies, your condors, or even calendar spreads if you want to be able to give it a little bit of leeway up or down, or as it moves sideways, I should say. Now on the bear side, I'm not a huge bear guy right now. I don't want to throw a bunch of bearish trades out there. So when you have one like Pfizer that just seems to be really bleeding lower here and not really participating with anything else that's out there, it is definitely underperforming. So we do want to take advantage of maybe this channel moving lower. but I just don't see any sort of a reason that this is going to have a drop like this, right? I do see that it might do that very shortly and then come back up into this range. So I'd be playing something more sideways to down. This is going to be a 0 to a -1 play. In fact, any bear that you guys do right now, I would error to that. I would error to something kind of sideways to down. Don't get too aggressive in bearish direction. I don't think you're going to get too much follow through. That's my opinion. All right. So tomorrow's outlook. Bullish sentiment, it's going to continue. High base opportunities could continue to float higher. Stay close to that +1 for now. Don't be afraid to chase some of these things or trade them if they pull back into these ranges or they're high basing. I showed you Johnson & Johnson as, hey, this is kind of cool. It's one that's actually corrected, and maybe it could move higher along with the markets. Understand, it's going to need a lot more than one day to confirm a pivot point from me because it has come from such a bad bearish area, and once again, an underperforming sector, which was healthcare for a long time. So I'll be patient with my bull pullbacks, let them work for you, and even then, folks, shoot your target past the previous resistance, play something that could float into the end of the year. But you're probably better off playing the high basis because those have been working. Be mindful of the underperforming stocks and sectors, energy, utilities, anything that's going to be kind of beaten down with that, but don't play them too aggressively. Stay 0 or -1. You could play bear credit spreads, right? Just to make sure, hey, this thing's not going to go any higher. It might not go any lower, but let me go ahead and put on a bear call spread, something like that, or a horizontal calendar spread. Those can work, so you don't have to be too aggressive in direction when it comes to the bears. PPI, FOMC announcement, jobless claims, retail sales. We got all sorts of stuff. I think this might be one of the least eventful FOMC announcements we've seen in a long time, or policy changes, because we're past it. We're confident. We're comfortable. These markets are happy with where we're at when it comes to the anticipation of inflation moving forward and sentiment. Sentiment is super, super bullish. So that will drive, I believe that will drive the markets through the end of the year, barring any sort of massive surprise or any sort of event. Come January, it's a whole new ball of wax, and we'll talk about it then. Check your potential trades. I glossed over a few. There are some out there that are coming out, but I really think this close to the end of the year, the window dressing, the things that are going on right now, the steadiness of these markets. It's interesting to see the volatility's just dried up. It's pretty consistent and comfortable in this direction. So I don't think much is going to change. That's what I've got today, folks. Thanks for joining me, and we'll see you next time. Bye, everybody.